Should you buy real estate or invest in the stock market? Maybe it's a mix. I don't know. What should you do? Let's learn. Hey, it's Eric with Jazz Wealth Managers. Let's talk about a little bit of real estate versus the stock market. There's a lot of differences out there, but there's a lot of similarities as well. The thing is, I get a lot of questions from clients wanting to talk about investing in real estate, but is it actually a good investment? Or is it just something you want to do because maybe you saw, I don't know, one of these famous people, Grant Cardone out there telling you how much money they make as they get into their private plane off of real estate. Now, I'm not saying that Grant Cardone isn't making a lot of money. He's doing a great job with what he does, but Warren Buffett made all of his money in the stock market. There's a lot of people that have made money in different areas. It's not a one-size-fits-all. So you need to be educated on this. So that's what I want to do with you today. So let's talk a little bit about this. Let's go over to the handy-dandy board and let's talk for a minute. Now, what we've got right here is, let's just say we've got the stock market. Now, stock market as a whole, it's generally pretty simple to understand. When it comes to investing in the stock market, the ultimate goal is you're going to buy a stock. Let's just say that you bought XYZ stock, and for that stock, you bought it at $10 in price. Well, then if XYZ stock goes up to $17, well, now if you were to sell, you made $7 profit on this. Or if you broke it down, then let's just, you know what? Let's just say that we went up to $20. Let's really make this simple. So if you went to $20, you have 100% profits. Wow, trying to get this done there. There we go, 100% profits on your money. That's what would happen. So you're doubling your money. Well, that's the way this works. Now, if you invested in XYZ stock, and let's say with XYZ stock, it pays a dividend. Well, now we're talking a little bit more like real estate, because the way this would work is, let's just say that you paid the $10, but now it gives you a dividend on it. So let's just say your dividend is 2%. Well, if you're getting a 2% dividend on $10, that means then, generally speaking, they're going to give you, what's that, 20 cents. So 20 cents right there on your money. So you would get the 2% dividend, but then it also goes up to $17. Well, while you're getting your dividend, you're also getting the payment here, which is kind of like rent in real estate, but then your money is also appreciating with the stock, and then when you go to sell it, you can still take your profit. That's a lot like the way real estate works. But the thing about real estate, the problem what people don't understand is, what is a good investment? You see, in the stock market, oftentimes you could just go buy the S&P 500, an index, or if you work with an advisor like us, we can help you and build out a portfolio so that you're investing and your money is growing ultimately long term. That's the goal, right? Well, with investing in real estate, people say, well, I'm just going to go buy a property and it's going to appreciate. Now, just like stocks, you could buy a bad company. But the problem with real estate is oftentimes you can't get diversified. So a lot of people are doing different things right now with real estate. They're buying things called REITs, or real estate investment trusts. Companies are basically making out a fund. They have options for you that you can then put in money. You can invest in this, and you're basically part owner of the real estate fund. So if you're part owner of it, then it's going to be paying you a dividend or a percentage of the earnings to you from that real estate. That's one way to do it. Or if you're wanting to go out and just buy a rental property, the big thing you have to realize is, let's just say that you're going to buy a rental property for $300,000. Well, if you bought this $300,000 rental property, what you've got to be able to do now is really calculate all of the costs and the earnings. Because when you're investing in real estate, it gets very complicated. So let's take a look at how this would work. Oftentimes, a term that's thrown out there is called the cap rate. So the cap rate is something that's going to come into play. Let's just say that this property right here makes $30,000 a year. So that's off of the rent. Now, if it's making $30,000 in gross or net revenue that's coming in, operating revenue, NOI, net operating income, there's all kinds of these weird terms when it comes to it in real estate. So what this would look like here is that's 10%, or what would be called a 10% cap rate. The problem with the cap rate is this does not start to calculate in anything such as taxes. This board's going crazy on me. Insurance. And the big one is the cost that could happen. So any kind of repairs. So what happens if the roof leaks or anything like that? So if you're getting a 10% cap rate, you start to break down all of this and you actually figure out, okay, I'm getting a 7% return on my money. Maybe after you pay your taxes and your insurance and any repairs, in general, on average, you're making 7%. That's still pretty solid income. The thing you've got to look at it then is just like stocks. Is it appreciating, and at what rate does it appreciate? In this market, that's where the danger comes into play. If you would have bought a property in 2011, it was hard to go wrong because the properties were at a very low value. But in this market now in 2022, it's a different ballgame that you're playing in. You have a lot of properties that are really at the highest level they ever have been. Yes, people are saying maybe the market's not going to collapse. Could it come down some? Yes. But how fast will properties actually appreciate? So that's something you have to look at when you're looking at investment properties. It's all about cash flow. That's what real estate investors are actually looking at. They're not just looking at trying to get into a property and saying, okay, well, you know what? As long as it covers the rent for the time or covers the payment for the time being, I'm going to be okay. That's a way to look at it, but that's not actually a way to look at it as an investment. That's just a way to put your money away, and hopefully over time it's going to appreciate and you're going to get something off of it. So make sure you know what you're doing when you're coming into investing in the stock market or in real estate. This was just a little quick educational point on that. Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.